OECD says we need to guard against rand strength, and the finance minister coming out today saying they will support the government in accumulating foreign exchange reserves. We've long heard that the South African Reserve Bank is accumulating aggressively dollar reserves.
Well, what we've heard for a long time is lobbying pressure for the authorities to start doing something about the strong exchange rate. Now, what you see from the reserve figures is that the SARB, the Reserve Bank, hasn't been buying dollars for its own balance sheet. But what we're starting to see is evidence that maybe it's actually the government rather than the central bank who's trying to weaken the currency, effectively by taking money offshore, building up a big pool of dollars offshore, which is now $4 billion at the end of June. Suggests they've taken quite a bit of money offshore. The intention is probably there to try and stop some of this currency appreciation.
What are we looking at in terms of the South African Reserve Bank's perception of a fair value? When we talk about this weaker currency, what ultimately are we looking at on the dollar-rand exchange rate?
The Reserve Bank will always be very careful and not put out what they say is fair value on the exchange rate. Business and labour will go a lot further. Business has been saying 850, 875. We've heard suggestions from Labour that they'd want up to 1050. I think that's unrealistic at this point in time. But really, the key difference is it does seem to be that the authorities who've been talking about trying to weaken the rand for a long time are actually finally doing something about it.
Well, we've got the MPC meeting on the 22nd of July. That's this Thursday. Are we going to get a strong signal from the South African Reserve Bank Governor Jill Malkus that this is her intention? A rate cut would signal that they're looking for further rand weakness effectively.
Yes, that's certainly quite possible. If you look at the Harvard Group's suggestions, what they're saying is tighten fiscal policy and at the same stage loosen monetary policy. That should keep your economy in balance but take off some pressure on the currency. And at the March MPC meeting, we did hear the governor talking about the strong rand as a reason why they cut rates. Having said that, at this stage, the rand is off its best levels, certainly doesn't justify a cut at this stage. I think it's very unlikely that the Reserve Bank will do anything this week in terms of cutting rates. There is still a possibility, perhaps 40%, that they will carry through with a cut in September. But at this stage, our view at Rand Merchant Bank is really that we're probably at the end of the cutting cycle. Probably only September next year we can start looking for hikes.
Isn't it surprising to you that we didn't see the dollar rand weakening dramatically this morning to the top side on the back of the big sell-off that we saw in the US equity market on Friday? We were down 2.5% on the Dow Jones Industrial Average. That usually equates to weakness in the local unit.
Yes, but we must remember what we're going through at the moment is corporate reporting season, earnings season in the US. So you're getting a lot of earnings coming out, really throwing Wall Street around all over the place. It doesn't really have that direct an implication for South Africa. We don't really care if one corporate's up or not. It's really the risk appetite that we need to track. And that's probably a lot more stable than the volatility on the Dow would suggest.
Corporate earnings, we've got IBM reporting after the bell tonight. We have seen some earnings disappointing on the top line. And of course, that is a key focus area for the market. We need to see that top line growth to substantiate the fact that we are seeing the US economy returning to some semblance of traction.
Yes, but in fact, the worrying thing is we're starting to see data that's suggesting the US economy is starting to slow very dramatically. In particular, we had that figure on Friday, the
consumer sentiment at 11-month low.
Exactly. Almost a whole year's improvement in consumer sentiment was unwound in 1 month, in July alone. If you take that figure at face value, it actually suggests that consumers are going to cut back on their spending. So it really suggests not only that the US economy is slowing, but that we truly are going back into a double dip. Now, I would emphasize, this is only one data point that suggested it, but certainly is one reason why we had such a dramatic fall in the Dow on Friday.
Euro dollar 129.91 on the top side. There's concern that we are going to see the US dollar continuing its weakening trend from these levels. Where do you think we could go possibly in the short term? Yes,
incredible uncertainty over where euro dollar is going. We've had so much volatility in that cross since the financial crisis has started. We've been from 120 to 160 to 120 to 150 to 120 to 150 back to 120 and now at 130 again. It's just remarkable volatility in the world's major exchange rate. Where we are at the moment is euro dollar is testing up towards that 130 level. If euro dollar can break that, then certainly we're in a very negative dollar environment, and you're going to see that reflected in the rand crosses as well. Remember, if euro dollar is heading up, then either dollar rand has got to come down or euro rand has got to go up. And what we're seeing at the moment is that feeding through into the euro rand cross. As you mentioned earlier, 9.90 now on euro rand. Perhaps if euro dollar can break that 130 mark, euro rand is going to go above 10. It takes a lot of pressure off our domestic exporters.
Time period for euro rand to go above 10 in your opinion? Short term?
Yeah, it could certainly be this week. We've got a lot of event risk this week.
Well, let's talk about that event risk. Firstly, Moody's downgrading Ireland today. Was that a given because the market didn't react too aggressively to that downgrade? Or
yes.
Are we just ignoring the rating agencies now?
We've seen a number of downgrades as we've discussed over the past few weeks.
Well, there we go, 9.94 on the euro rand, by the way. Sorry to interrupt your train of thought. We're nearly at that 10
yes,
level.
so 10 could certainly come tonight. Yes, rating downgrades are coming. We know the periphery of the Eurozone is under a lot of pressure. But of course, what everyone's looking to is that stress tests on Friday. In the US, we've got Bernanke's testimony to Congress. Thursday and Friday, we've got data coming out of Europe. Is the economy going to slow because of all these fiscal worries?
Coming back to the local environment and the euro rand, as you say, we're close to that 10 level, which should be celebrated by exporters. You made that point just a moment ago.
Yes, certainly. And remember, we've been right down to 9.20 on euro rand. And Europe is still our major export partner. And it's really been euro rand that in 2009 came down so aggressively, putting our domestic exporters under pressure. And if you think about, when we talk about the rand, those of us in the market, we tend to focus on dollar rand because that's a traded liquid cross. A lot of our exports are denominated in dollars, but our major trading partner still remains Europe. And you've got a domestic economic downturn there because of all the fiscal problems. Our exporters are also suffering because that strong rand against what has been a very weak euro. So if euro dollar can push above 10, push above 11, that's certainly going to bring some relief.
In the European Union or the Eurozone, we've also got the news around Hungary, which isn't actually part of the EU, but they have access to that EU IMF funding that was put in place in 2008. Now there's some dispute as to whether they're going to continue to have access over that funding. Is that fundamental risk for the euro?
Well, actually, perhaps it's fundamental risk for the rand because South Africa has a surprising amount in common with Hungary, particularly large current account deficit, high-yielding emerging market. So in some sense, we've had the same fundamentals. If we're having real pressure coming through in emerging markets in Europe, you can easily see people coming back, putting pressure on other emerging markets such as the rand.
Just in terms of pressure, could we see a blowout in the rand and perhaps see that 850 level if we did see Hungary coming under certain constraints?
Yeah, you could see 850. You could see a lot higher, Bronwyn. And remember, dollar rand has a history of really falling out of bed. That happens remarkably often, happens on average once in every 3 years where we see a bigger than a 35% adjustment in dollar rand. Remember 1996, 1998, 2000, 2001, again in 2006, again in 2008. As I say, it works out as a rand fallout 1 in every 3 years. It's quite possible that yes, the rand will come under pressure. What would generate that is if the global economy goes into a serious double dip. In other words, if we see negative rates of economic growth coming out of the developed world.
And then just coming back to that event risk that you were speaking about, the European bank stress tests will be published on the 23rd of July, as you mentioned. We had Jean-Claude Trichet last week saying that the events are not going to be catastrophic, but there certainly are going to be tough stress tests. We've also had that Macquarie Securities report doing the rounds saying that 11 banks are set to fail these European stress tests, including Commerzbank out of Germany.
Yes, well, first of all, the Europeans make it very easy for us. The stress tests are going to come out at 6 p.m. on Friday. I think we can finish our day nice and early on a Friday, but no such luck. This is the key event. If you remember, back in May 2009, similar stress tests in the US proved the turning point of the subprime crisis. Good stress tests that the market believed in, recapitalization of the banks, really reduced the fear of that implosion in the financial sector. The hope is that we can see the same from the European stress tests. It's unlikely that we will see it to such an extent. There's a lot of elements that we need to take into account. What are the stresses that they're going to put the banks under? And furthermore, how are they going to come and recapitalize the banks? So if you
in other words, the devil is going to be in the detail.
The devil will certainly be in the detail. And if the detail is, if the stress tests are very extreme, the market will have a lot of confidence in those tests, and you're going to see a significant market rally in the euro and in risk in general. If the detail is negative, in fact, if they've tried to skim over the results, you're going to see exactly the opposite. This is really the key event of the week, possibly a turning point in terms of 2010 in the financial pressure, the sovereign risks emanating from Europe.